But take heart, because now we're going to talk about the opportunities on the horizon. This video is more important right now today than ever for you, for me, for all of us. We've been suffering a little bit from rising inflation for a while. It's finally showing signs of coming down. And I think it was Walmart joined Target now with a few other retailers dropping prices across the board. So that's a much needed relief at a time when most families don't have a few $100s to scrape together for an emergency. So this strong economy is leaving a lot of people wanting for more, and maybe you're one of them. You want to find out how to get a leg up, make some money, and maybe help yourself, help the people that care about, maybe even pay down some bills. That's what this video is about. The opportunity horizon is going to talk about getting your mindset right to spot all these opportunities which are all around you right now, and which are the opportunities that are the best. Where a lot of people go wrong is that they're not starting from the right base. They're just seeing on the news that stock's doing well, people are making money, maybe your neighbor's doing well and you want to get a part of that. And if you have any emotions where there's desperation, greed, or competitiveness, whether you're competing with your friends, your neighbor, or the mob in general, you turn on the TV and everybody made money on such and such investment, you think it's a good idea, I'll also put money into that. That's where they go wrong. A lot of people get burned so bad by that because think of a raft. Everybody goes over to that side of the raft. You say, well, everyone's over there. They must know what they're doing. I want to get a part of whatever they're getting into. And so you go on that side of the raft, and a lot of you fall off the edge when it tips. Any stock can be overvalued. No matter how good of a company, no matter how much money they're going to be making, how great the business model, the right time and the right place, any stock could be the best stock in the world, and it goes up and people buy it, keeps going up, so people buy more, driving the price higher to unrealistic levels that then come down and hurt a lot of investors. A lot of the most popular big name investment events that everybody's talking about, those are the ones where most people wind up losing money. Even if it's an investment that does pretty well, it usually goes too far, like a pendulum, where it's undervalued, then it's way overvalued. And usually people are getting involved with the overvalued end of it because they hear about it on the news. If you're buying a stock that you learn about on the news, you're already much too late. So don't let your emotions take over. Don't chase the headlines. You want to be way ahead of the game, upstream. You need to learn about this stuff and get positioned before everybody else is talking about it. That's what happens with a lot of these meme stocks, though, because you hear about them first in the media because they're doing well. And so everybody jumps on board and it goes even further and then comes back down to where it should be. A good example of that is GameStop. It did pretty well before, then it came back down. And so now everybody's, let's go for another run on GameStop. But they completely do it like a meme rather than the underlying quality of the company, like Donald J. Trump media. Not a political comment. I'm just saying the stock itself, DJT, it's making $1 million for every 40 million it loses. That's not a good investment any day of the week. And if you ask me my opinion on it, I got to tell you that it's not a good investment from a fundamental standpoint. If you want to invest in it as a meme and to support Donald J. Trump, etc., go ahead, knock yourselves out. The fact that the price of the stock is as high as it is right now, that alone reveals that it doesn't matter about fundamentals of the company itself. I'm a fundamental investor. I want to buy a company that has a proof of concept, or they're putting out a product again and again to more and more people and making a bigger and bigger profit on it the whole way. But a lot of these meme stocks, they fall into the category of even the hot industry. Some of these hot industries are the fancy, flashy industries. Robotic intelligence, artificial intelligence sounds great. And it's really important technology, but that does not mean that the stock that's talking about doing it or using it is going to do well. And it might, but it will also attract a lot of investors who think it's going to do even better. It's going to drive the price to overvalued levels. Overvaluation is one of the things that's going to cost you the most money if you're a newer investor. Take NVIDIA, for example. They're doing great. They're in the best industry. They're crushing it. But everybody knows that. Everybody's on that side of the raft. And the company itself could do really, really, really well for a long time. That doesn't mean that there won't be people who are losing a ton of money on the shares. But take heart. Let's just get past these warnings because now we're going to talk about the opportunities on the horizon and how you can see them or spot them or understand them. Be aware of this so that you know what to look for before it's too late. You get involved before everybody else sees it. Then when they see it, they come over to that side of the raft, you cash out and you're laughing. I always talk about gold. You guys know that. So I'm going to get to that right away and get it out of the way. People are asking me, is it too late now to get into gold? Is it too late? Have I missed the boat? Partially. But listen, I'll show you a long-term chart of gold, and it's been doing well for decades, as I've been talking about it for decades. And most recently, it's really ramped up in a short window of time. Just as I always tell you that 80% of any stock's gain or any investment's gain usually comes within about 20% of the time. That's what we just had as part of that 20% where the price of gold and silver, precious metals really ramped up really high in a short window of time. So then people say, what a good investment. They notice it. They go, maybe now I should start listening to Peter. But here's the thing. If you didn't listen to me for literal decades, I've been going on and on and on about gold this whole time. I've shown you that I put my money where my mouth is. What's going to make you listen to me now? I think that gold has made a really significant move in a short window of time. I think it's got a lot further to go. So you're not going to be being foolish by putting some money into some of these investments, but you could have done even better if you listened to me in the first place. So I think that precious metals are going to do tremendously well from here. The mining stocks also, and some of the silver miners we revealed have gone up 4 times in value in a very short window of time, a matter of months. Is there higher to go? I believe so, in my opinion, that there's tremendously higher to go. But you might want to be getting into some of these other opportunities earlier on when they're still not as widely known. Everybody's talking about gold now, but that's what I'm talking about, how now it's in the news, everyone's noticing it, so now everyone's talking about, wow, gold's doing so great. What's better than having gotten involved with it a decade ago? Here's a long-term chart. It's been doing well for a long, long time. But listen to this comment I found today. I pulled off the internet this morning. I almost fell out of my wheelchair. It's from Cube Wealth. Most estimates suggest that gold investments should make up only 5 to 10% of your portfolio and not more. That is the most unbelievable comment I have heard. It's absolutely irresponsible. What if you had put 100% of your investments into gold 3 months ago? Then you'd be doing pretty darn well, wouldn't you? But I'm not giving you personalized trading advice. Everybody should diversify whatever. I don't. I put my money on the stocks and the investments that are going to do the best. I've always done that. And with the newsletter, I'm always looking at low-priced, newer companies. Technically penny stocks, but it's got such a bad name. I explained it, though, when I published Penny Stocks for Dummies, how any stock less than $5 per share is considered a penny stock by the SEC. And our specialty is these newer, high-quality companies that are misunderstood. A lot of people say, well, penny stocks are horrible, and I agree with them. I always said about 95% of penny stocks are horrible investments. But there are companies which are small, just hiring their employees, rolling out their proof of concept, and they're going to do really well for a significant number of years going forward. And you think sub $5, you think penny stocks, you think these are iffy companies that might do well, might not do well. But there are some massive corporations that are trading for less than $5. For example, our recent pick is trading for about $2.70 or so. They made $1.2 billion in net profits, earnings. That's earnings, not revenues. They made $1.2 billion in earnings after expenses. That doesn't sound like a penny stock, but it's trading in that territory. Another great example of that was Ford Motor Company. Here's a long-term chart. I'll show you. We selected it when it was trading at about $1.80-ish or so. And this is right when GM was going bankrupt. And Ford went on, because they were crashing in sympathy with a lot of other stuff at that time, Ford went on to go up to $18 within a couple of years. So about 10 times your money on a penny stock. And it's not a tiny company. It's a big, massive corporation. And I'm actually in Detroit right now, and it's the best place for your van to break down. I was actually driving back to Toronto to the studio, and my van broke down on the interstate. I had to get it fixed. I figured, what better place to get it fixed than the place where they basically built the entire auto industry. But a good way that I always talk about, turning a few $100s, which everybody can pretty much gather together, I imagine, turn it into a few thousand. A good way to do that is what I talk about with a lot of these stocks. And we're not talking about risky, take a chance biotech kind of stuff. We're talking about companies that have good profit margins, good liquidity ratios, and I even tell you in the reports, I say this company is making money and their market share is growing and they're expanding, they're being adopted, and their customers are loyal. We look at that kind of stuff, and then you find a company that is going to grow in size. And as a company starts small, grows in size, it typically will see the share price following suit and getting bigger too. It's not rocket science. It's just a lot of fun. We love what we do, and We've got a lot of incredible testimonials talking about how it's helped people's lives. Single moms avoiding bankruptcy, people paying their truck payments. You can even see a lot of this yourself on peterleeds.com on the testimonial section. But when you're thinking about your angle, your investment move going forward, where is a good place for you to put your hard-earned dollars that could potentially grow the most? Look at stocks that are out of favor or just misunderstood. Think of companies like Sin Industries that they trade for lower values than they typically would because they're in fur coats. Not that that's a sin industry, but fur coats or cigarettes or casinos or alcohol, they make a tremendous amount of money, some of these companies. But investors don't treat them like that because they're kind of frowned upon sometimes. There's an opportunity there. The value of a company, if it was any other company, might be $8 and it's trading at $2. That is something to look at. If you want to look at a company to be a cash cow for you and get involved with that at a lower price than you otherwise would because maybe the industry at that point in time is frowned upon. Social shifts come and go. I don't think that fur coats will come back, but there comes a time where everyone's hitting on such and such industry, and you can get involved with a lot of the stocks at ridiculously lower prices than you otherwise should have had to pay. But our bread and butter is always about newer and smaller companies that are just having a few employees or getting started, and they're at the proof of concept phase where they say, okay, we've got this widget, it costs us $180 to make, but there's a demand for us to sell it to people and they're paying $400 each. And so you're making that profit. And then they get their production costs lower and they start making even more profit. Those companies will be around for a long time and they're going to be really rewarding to shareholders. Always keep proof of concept in mind. But another angle too is to buy the extremes. You know that, for example, my favorite for this demonstration is oil prices. You know that oil is not going away. You know that the world is running out of oil, since I've shown you that we have about 40 years left at current extraction and usage rates, taking into account new technologies and that when things get more expensive, less people use them, etc. But still, you know, oil prices will always be range bound. And here's a long-term chart of oil, and it's a really wide range. But every time oil prices get below $30, around 25, that is an extremely low value at any point in time. And it always recovers. So when you see something at an extreme overvaluation or undervaluation, or you see something at an extremely low price or extremely high price, the extremes is where you know that that move is going to start going the other way. If you were to just buy oil anytime it's under $30, you mortgage your house and put it all into oil every time oil drops below 30, you would do pretty well. Probably better than even Warren Buffett's been pulling off. So you play the range, you buy the extremes, not just oil, but there's a lot of examples of extremes where something that's always going to be there, like McDonald's, Starbucks. It can come and go, it can rise and fall, but there's regions of any stock where it's definitely undervalued for what they're producing or what they're providing to the demanding consumers. And we're not just talking about stock market investments, we're talking about all kinds of investments, like real estate, for example. One of the reasons that I was so adamant about gold prices rising, the same reasons that real estate prices are rising right now, and why the overall stock market is doing so well. It's about the deterioration of the purchasing power of the actual currency. Here's an S&P chart from 1981 till now, and you can see that it looks incredibly similar to the monetary creation chart. It looks incredibly similar to real estate prices chart. As the dollar devalues, everything takes more dollars to buy it. That's why it's not such a great thing when the stock market does that well. Look at Venezuela. They had not only hyperinflation, but gold prices went so high, so quickly that it's not even worth talking about. It was just ridiculous. And their stock market was the best performing stock market in the world at the time, while the entire economy became basically as if it was the Mad Max world. You're not even getting medicine on the shelves half of the time. No food. Stock prices were up by 254% in annual terms at the end of 2022. This is in Venezuela, following the 344% in the prior year. That's from Statista. Stocks went through the roof in Venezuela. That's why it kind of freaks me out to see stocks doing so well with the underpinning economy. But that's for another video. I'm trying to be more optimistic. But listen to this. Venezuela had a crash up where the value of everything went through the roof, including the stock market, having its best year ever All the while, inflation destroyed the entire economy and all savings. They're going to say that it's possible we never see real estate come down as I expect. They're going to say that we could have a crash up in real estate prices, crash up in the stock market, crash up in things like cryptocurrencies. Everything's going to go higher in price because it's hiding the fact that the entire economy is shrinking beneath it. This is from the Financial Post. In Venezuela, people break off flakes of gold to pay for meals and haircuts. The local currency, the bolivar, has been rendered almost worthless by hyperinflation. I found it interesting that there comes a point where you don't see it, but then you scrape off a flake of gold to pay for your groceries. That's why I say that also own some physical silver. It's a lot cheaper and it'll be just as useful for barter if you get to that point. And it's a great investment anyways. It's going to keep on going higher in price, in my opinion, by a lot. And you're also going to want to know what to be looking at. Don't look at the mass media. Everybody's talking about Tesla. So you think, oh, I should invest in Tesla. I'm not telling you how to invest. I don't know anything that's going to happen. I don't know. So, but I'm saying if everybody's invested in Tesla, where's your angle? Where's your opportunity? Where's the undervalued shares you're buying? They don't exist. You're going to want to watch some really good, high-quality sources of information that are not so widely followed. Peter Leeds' YouTube channel sounds like something, maybe. I don't know. I'm not saying nothing. But when you get good information that's not widely followed, then maybe there's an angle there for you. If you're basing your investment strategy off CNBC, yeah, you're going to get about what everybody else gets. You might get lucky, you might lose a little more, but you're basically just jumping into the crowd on that side of the raft. And one way you can get the right information is get in contact with me directly. You can email me directly. We'll bypass Tammy, all the gatekeepers, customer service. It'll come right to me if you are a Peter Leeds insider for a couple of bucks. Pretty convenient to have direct contact by email with me, I'm sure. But don't take my word for all this stuff. Let's listen to Brian Grace.
Once again, your team's crystal ball slated for me.
The Peter Leeds newsletter is one of the most popular financial publications of all time. There's a reason for that. Please subscribe to this channel to get more videos like this. Please become a Peter Leeds insider. And we look forward to helping you guys get through this chaos that I believe is going to be coming soon.